Traders often ask me, what's the best setup for beginners to focus on? And I'm biased. I always tell them the high two, a breakout and a two-legged pullback. In this video, I'm going to talk about high twos that fail. That's a breakout and two-legged pullback that then fails. I put a video about high twos on my channel yesterday, and I spent loads of time studying and researching there to put the material together. And that was great because in both of my trading sessions today, when I traded Asia, trading the Seng, and in the Euro session, trading the DAX, both had failed high twos. And I'm going to talk through both examples because they give you an idea of why it's such a great setup. Yesterday, I released a video called How to Trade High Twos. And at the end of the video, I talked about what happens when a high two fails. And waking up today, both the Asia session and the Euro session had failed high twos. Market opens with a gap up and immediately gets follow through. Some traders will buy above that. Other traders will look at the stop distance and decide that's just too far away, and they'll wait for another kind of entry. The next bar is a bear inside bar. That's a weak high one. I'm not going to buy above that. I'll see if anyone else turns up. No one turns up to buy. Now we're probably in a trading range and we're going to go below the low of 1. The first bar of the day only has a 20% chance of being a high or low. Anyone that bought up there is now trapped. Now we're back at the moving average. We're back to the low of the range. The market then forms a buy signal. This is a high 1. Can you buy here? Yeah, you can. I think a lot of traders will try and buy some kind of a pullback. This is a tight bear channel and should have a second move down. That could be the second piece down. I bought in this gap yesterday. It was also the open of the day, hoping for a chance to run it up. Now you've got a reasonable buy signal. Here's a good buy signal. There's your high 1 buy. There's your 1-to-1 profit target. Okay to get out there. Now we've got a new high. Traders are waiting for a high 1. Here's a bull bar. If we go above the high of that bar, that triggers a high 1. Entry bar is not great and stop is far away. You can see on the following bar, traders had a chance to get out of that trade. If you didn't, the market's likely to have two legs sideways to down, and you're going to have to scale in lower to get out of that trade. If you bought out there, that's a 50% pullback. That's a 65% pullback. Now on the way down, we trigger a high 1. Now we've triggered a high 2. So this is a high 2 pullback. So new traders are going to get long around here, betting that this is a strong first leg, and this is going to lead to a trend resumption up. Once again, as soon as the traders get in the market, it pulls back with a bear bar. This has been happening all the way through here. And that's making it a little bit scary to buy high. Now you've got another buy signal. You can call it a high 3. It's basically a wedge pullback, a bull flag. Problem is everything here is overlapping and it's forcing you to buy high in the top of a trading range. Remember, if you're buying up here, your stop's probably down here, and that's a problem. Anyone that bought up there after seeing this had to get out of that high 2. So this is called a high 2 failure. So one way to trade it is to take the loss here instead of taking the loss all the way down here and look to reverse. This is lunchtime in Hong Kong. Not a great sell signal. This buy signal or this buy signal got tested on here, and that might be a measured move pullback. So I think we're going below this bar here. This is also the wide stop for those traders. When I tried to trade the high 2 up here, it just had no follow through. If a trader sees this, there's a chance they can just sell below this double bottom, betting that any chance the bulls get back up above the moving average, they're going to use to exit their position. Now you've got a chance to sell below a double bottom. And I think a lot of traders did that with a measured move target all the way down. So they take the range up here. It should have been a high 2. That should have been a trading range and gone higher. But instead, we broke below the moving average, pulled back, and went down for a couple of legs down. Now, we never went all the way below this bull bar. We went to tag the stop if you used a stop below that bull bar. Now, some traders would have used a wide stop down here. That's okay too. But because of the distance, and I'm speaking to myself as well, I'm not able to sit in a trade for that many bars and manage it correctly. If I buy up here because I think the market's going higher and we start doing this, I usually take a small loss and look for the next trade. This trade could have gone up here. You're welcome to pause the video on this slide so you can take a look at a possible buy entries I thought were reasonable, and also the sell signals for a measured move down. So if you take a loss up here, you can make the loss back. If you didn't take the buy up there, then you can just get the profit on the short position. On the DAX chart today, we had a failed high 2 and a measured move down, and I wanted to talk about that trade. I made a video about that yesterday. And it was great that I spent so long on high twos because then I was ready for it when it came into the market. We had a small gap up and a strong bull bar above the moving average. Traders are looking for follow through. That's not good, but it is a new high. And now we've got a buy signal. We went above a prior swing point, so it could be always in long. I think traders are going to buy above that bar. Good bull follow through. I think traders are also going to buy that bar. I think bulls are going to buy that bar. This is a very big bull bar, closing far above all the highs of the prior bars. This can act as a profit-taking bar, but it's also a new high. Traders are looking for a pullback and then a high one. The market pulls back very strongly, almost to the low of that bar. It goes below and forms a buy signal. So this is a first attempt. This to me is a high one. We never triggered above the high of that bar, so you never got in. The market's trying to form a high two buy signal. Here is basically a two-legged pullback to the moving average. Here's another opportunity to buy above that bar. But look what happens. We never went above that bar. We also never went above this bar. Now we're going below the high two signal. I thought it was interesting that having done a video on high twos yesterday and then having traded the same pattern in Hang Seng, that it turned up again on DAX. Now, what do you do if you're long? Well, if you've got a stop down here, I think it's better to get out of this position. Some traders might argue the swing point is here. That's where the stop is, and you're about to get stopped out. So that's where you take a loss. This is a double bottom. We've broken below that double bottom. So now there's an opportunity to get short. This is a big bear bar. If you sell a big bear bar down here, you're very close to the target. Other traders will wait for a pullback. I sold 50% of this bar, looking for a test down to the lows and running the stops on the bulls down here. This was another sell signal. This is the low one. So now you've got a new bear breakout. So you're out of your long trade. Now you're able to sell. Here's a bear breakout. Here's a sell signal. You can sell the close. You can sell on a stop one tick below that bar. Some traders might use the stop all the way up there, but it's also possible just to use the high of the breakout. If this is a breakout, price should not get all the way back there. We didn't quite go to the target on the first attempt, and then on the second attempt, we dipped through. So I had a small position and took a loss up here on a high two, but then I was able to reverse on a larger position on the measured move down. So that's how you can use a high two to participate in a bull move, or if you take a loss, you can get your money back getting short. Well, thanks very much for watching that video. If you didn't watch my first video on high twos, be sure to go and check that out. Please let me know in the comments whether you found that valuable. My name's Tim Fairweather from Zen Trading Tech.